Welcome back, welcome back. It's about that time of day again, folks. 7:35, a little bit late here this morning, 7:40 a.m. Eastern Time this morning. My name is Joseph James. I'm a lonely old day trader from schooloftrade.com, working with some charts here in my home office in Los Angeles. Normally I'm here with Mr. Marty Errico from Traders Audio, but Marty will be joining us a little bit later on this morning on his broadcast at 8:50. And this morning we're going from the screen, and we're going to stay on the screen, but we usually go from screen to the floor. Of course, we'll hook up with Marty tomorrow morning at 7:30 a.m. Eastern Time. So this morning, we're going to be taking a look at a top-down approach, a technical approach of trading crude oil futures. Top-down approach means I'm going to start with some slower time frames first, and then I'm going to work my way on down, right, looking at the overnight session and analyzing what's happening coming out of London this morning. My job this morning is to anticipate the direction at the open and look for those high percentage trading opportunities starting at 8 a.m. Eastern Time this morning. So without any further delay, let's open up the charts and let's take a look at what we have to work with this morning on crude oil futures. Now the first thing I'm going to do is this morning I'm going to start out with a much slower time frame. It's the beginning of the week. So let me go out and let's grab a weekly chart here to begin with. And on this weekly chart, this is going to give us just a good idea of where we are today according to the big picture. And you can see here we can also update some trend lines here. And boy, we have come all the way back into that price wedge. Now remember, kids, a weekly chart, I probably wouldn't use the weekly chart to trade with. I would definitely use the weekly chart to know where we are in this big, well, it's like finding the tree inside the forest. We now know where that tree is located inside the forest. Or if I was looking at a big city map, right, I would know where a certain street or where a certain cross street is in the big scheme of things, right, in the city. So this is that bird's eye view. This is that bird's eye approach to looking at the market. And you can see here we've come all the way off what we thought was a certain test of that 100 level early last week. And of course, the news from the Fed this morning, right, has continued to react. If you recall last week's Fed announcement talking about tapering off the stimulus. And of course, you can tell that's exactly what's affecting this marketplace this morning. So we have tumbled off these highs from last week, and it will be very interesting to see what happens this week as we go into a week after quadruple witching. As we move forward, we look at a daily chart here. We can see that the daily candle shows us we indeed do have a little bit of a bounce this morning, just a little bit of a bounce. And that big wick at the bottom of that candle tells us that we have made lows and we have come off those lows slightly. So we'll be interesting to see what happens as we push through. As you can see here, we've got support below us at 91.84. That 91.84 level, right, for the most part, should be a target for us, the downside. Okay, looking at this now, we can see tough to decide what's going to happen next based on these two charts. We definitely can see that we've come a very, very far way off of those highs this morning. As we move forward, moving from our daily chart over to our 4-hour chart, we begin to now see even more clues. And the biggest clue we see here on the 4-hour chart is the fact that we're trading at the lows of this channel, right? We can easily see the lows of this channel. We've got sell zones overhead. We have plenty of room here to go in any direction. You'll notice, and of course this is a simple exercise we'll do every morning with our students in our live trade room, is we always talk about the fact that markets can move higher, they can move lower, and they can move sideways. So what we see this morning is we can see, boy, price action can definitely move sideways. In fact, if you look closely at that recent 4-hour candle, you can see big wick at the top, big wick at the bottom. It's about as close to a doji as you can get. So we definitely can see here that we have some sideways chop and slop happening at this time. We know we have sideways slop. So we know that the price can indeed move sideways. If it moves lower, what's the case moving lower? We have a buy zone down here at 91.88, and if we move higher, a sell zone above at 95.51. Now, the way this works is that we know when using buy and sell zones that the best opportunities are going to become buying at a buy zone or selling at a sell zone. Where are we right now? We're nowhere even near that at this time. So this tells me that price action can really flutter here sideways this morning without any real issues. And it also tells me that trying to sell short or trying to buy long here is also going to be a little bit of a challenge until we get a little bit of clue out of the market personality. It'd be different if we were sitting right on top of support. If you were sitting on top of support right now or on top of a buy zone, I would say, well, the odds are in our favor to be buying. Similarly, if we were sitting at resistance, right? If we had a resistance level here above us, I would say, well, the odds are in our favor to sell short this morning. But as you can see here, we don't have that luxury today. We don't have the luxury of knowing exactly what is going on or where we have support or resistance immediately above or below us. So we know the 4-hour chart tells us anything can happen, but we know that we're going to look to sell the 95.51 and buy the 91.88. Well, that may not give us that much ammunition today, right? That's a little bit further down and a little bit further up. So now we're going to look for some levels to use right now. Again, I'm going to have these marked up on my charts, 91.88 and 95.51, because those will be areas I expect to see either demand enter the market, right? Demand will enter down at the 91.88, or we expect to see supply enter the market. Supply will enter the market above us at 95.51. Now that we have that information behind us, now let's move over now. I'm going to zoom in on a much faster time frame now, and let's take a look at what we have to see on an hourly chart. On the hourly chart, we can see we are indeed sitting right at support. We have a little bit of resistance overhead at 93.85, but for the most part, though, we are sitting at the lows of this bull channel. You can see as we zoom in on this chart now, if I take out my Fibonacci tool, I can define 94.63 and 96.71 overhead. So if we're going to get long this morning, which looking at this chart definitely should happen, right? We definitely should see some buyers enter the market at the lows of the channel, at the buy zone of 92.86, right? We can see lots of reasons why price should jump higher. Doesn't mean it has to, but that's some pretty good clues there if we should see some rising prices. I will look for targets at 94.63. 95.53, there's that sell zone we found right on the 4-hour chart. So use that for a profit target. And then, of course, we got 96.71 that will also be a great profit target as well. Now, on the flip side, if price does head up to 94.63 and then comes tumbling back lower, we will treat that as being a test of the trigger zone or a pullback or retracement in the longer-term trend, and we will be looking to keep selling short. As you can see, this 60-minute chart gives me reason to believe that we will see rising prices here in the short term this morning now that we've tested that 92.86. Don't forget, that 4-hour chart still shows us with plenty of room here to drop, but this 60-minute chart should give us some easy opportunities here to get buying this morning. Now you'll notice this buy zone at 92.86. If we do happen to come down before we go higher, we will always be looking to buy the reversal, right? Take it back up. And of course, if we do keep going lower, that's our sign this morning now to keep selling retracements as price moves lower. So I've got price levels left and right here this morning. I've got one last chart here though, and this last chart is really gonna put the nail in the coffin as far as the price levels we're gonna use this morning. As you can see here today, crude oil is trading in a relatively typical trading range. As we come out of the London trading session, as we come out of overnight trading, you know, we've moved a full dollar from overnight highs to overnight lows. When I draw my ruler here, you can see we've moved a full dollar. So we definitely are seeing a relatively typical morning trading range or overnight trading range if you're here in the U.S., morning trading range if you're in London. So that tells us that ultimately, as you can see, 93.21 has been tested. That would be, of course, my first buy zone here as we go lower. So I will be looking to buy now as we go higher. And of course, I've got a 93.21 level marked up ahead of time that I will use as the buy. You can see we've tagged that level once already this morning. It'd be great to see price dig into this buy zone and then make its move higher. That will give me a chance now to start buying pullbacks on the way higher this morning. So I will be looking at support levels below me at 93.21 and 92.90. Moving forward, if I take a look at the rest of the support levels below me here this morning, you can see we have quite a few of them here on the chart. Support levels below me this morning, again, we talked about the 92 or 93.21. So 93.21, 92.90. I've got 92.79, 53, 20. I've got 91.83 and 91.24. It's incredible to see the 91 area come on our charts again after seeing the 100 level just less than a week ago. So you can see how volatile this market is. It's one of the reasons why we love trading crude oil futures. Support levels below me, as you can see here, are marked up on my chart. I'll be posting these levels for you on our blog later on this morning as well. Moving forward, we see resistance levels overhead, and we've got quite a few resistance levels to keep in mind this morning. As you can see, we've got quite a bit to talk about here. Resistance levels now overhead, you've got the highs overnight, 93.75. I've got 94.01. Oh, sorry about that. Let's get these to work properly here. There we go. 94.01. I've got 94.26, 94.34, 94.63. I got 71s, and of course 95s, 95.16, 30s, and 48s before we run all the way up to the previous high at 95.84. That's the previous high of day up there. I think it is. Yep, 95.84. So you can see, boy, lots of resistance levels overhead. Now, as always, you know my personality is always the same. We can be buying here now as we go higher using the anchor chart clues. Okay, so you're buying pullbacks right now using our entry trigger indicators. We've got many, many simple tools to use for all you traders out there to enable us now to get into these trades long. You can see here my entry signal indicator has already fired off here to get long already. So we are buying pullbacks now on the way up. Use these resistance levels overhead, 93.75 and 94.01 in the short term. These are going to be your easy levels to take profit. I, as always, will be looking for price to reverse in the reversal zone, and as soon as it re-enters the market here or re-enters the range, I will be looking to sell short. So long term here, I am buying pullbacks. Short term, I will look for little bounces off of these levels here this morning. I will look for a bounce off 94.01. Once you break above it, I'm back to buying pullbacks again. So short term, I'm getting long. Long term, I'm looking bullish as well. I will be using these levels of resistance here above me, as I've plotted here this morning, as profit targets, and as also I'll be using these levels of resistance for locations for a price reversal in the short term this morning. Boy, big drops, they tend to equal big pops, don't they? And that's exactly what we're seeing here this morning, that big drop that came in last week. Now, speaking of last week, let's talk about what happened last week real quick. Let's talk about the news we saw last week. Let's talk about what's happening this week. First of all, we know the market is reacting relatively bearishly to the Fed statement last week. If you recall, last Wednesday was our Fed day, right, our FOMC announcement. And basically what they were talking about last week was the Fed tapering off of stimulus. Now, we're crude oil traders for the most part, right, on this call today. So as crude oil traders, I want you to think about what the fundamentals are behind this market personality this morning. Think about what's happened. Last week, Ben Bernanke of the Federal Reserve said, we are going to be tapering off stimulus, which means we're going to be withdrawing some of the cash that we injected into the market over the last 2, 3, 4 years. What that means to us as crude oil traders is that now we have the market personality screaming at us that they don't have confidence that the U.S. recovery is going to continue. They don't have confidence since of course they'll be removing that stimulus, that new businesses will be starting, that the consumer confidence levels will continue growing. Guys, whenever we hear from the Fed and it has something to do with withdrawing stimulus or less stimulus or anything that we can read between the lines that tells us that the consumer's confidence in this country are going to be dropping, or that the investment in new businesses will be getting fewer and far between, basically the demand of crude oil is going to drop. So the perceived demand, the perception of confidence in the marketplace dropped last week. And that's what's resulted in this big tumble late last week. Now this morning, now we're simply seeing the reaction to that. Are the bulls going to come in and are they going to see this price as being very cheap? Or will the bears come in this morning and continue to push this price lower? It's a little bit difficult to tell at this exact time. So we're going to be watching very closely this morning to see exactly what happens to the market personality. On one side of the coin, we can easily see the bears coming back in and picking up where they left off, bringing prices lower and giving us selling opportunities as we go lower. On the other side of the coin this morning, we can easily see how the buyers may come in. And just like I said this morning earlier, it's amazing to see the 91 level down here, right? 91.83. It's amazing to see this area showing up less than a week after we went to 100. So we may see buyers come in and see this as being a bargain, right? There's so many traders out there that can look at this morning and say, boy, this is a bargain. I'm going to buy it. Shipping companies, air freight companies, consumers of crude oil, right? They're going to be buying crude oil futures this morning in order to hedge against rising prices later on in the week. So we know we're going to get most likely that bounce here, right? That personality that is bullish this morning as we go into the open of the new week. Looking at news this morning, we've got news at 8:30 and 10:30 today. So we've got news that will start us off right out the gate this morning. 8:30 a.m. is a minor news report. 8:30 a.m. is a minor news report. And, of course, I've got 10:30 a.m. this morning from the Dallas Fed Manufacturing Report. Guys, that's all I've got here this morning. I want to thank you all so much for coming out and joining us here today. I'm going to go ahead and update our blog this morning with all of the levels we have regarding crude oil futures. I'm also going to put more information about all the support and resistance levels we'll be using as well. I would encourage you to come join me here tomorrow morning, 7:30 a.m. Eastern Time. We go from the screen all the way to the trading floor, Monday through Friday here. My name is Joseph James. I'm at JJ at School of Trade. And, of course, we've got Marty at Traders Audio. We'll see Marty back here tomorrow morning on a Tuesday edition of our Crude Oil Squawk. And as always, it's great to have you guys here with me this morning. Happy Monday to you. And again, we'll see in about 23 hours and 30 minutes back here for our Tuesday edition. Again, check the blog. The blog will be updated here shortly with all the charts and the levels for today. Have a great one, guys. We'll see you in 23 hours and 30 minutes. Adios, amigos. Bye-bye for now.